Hey everyone, welcome back to Corporate Decoder, the place where we uncover the real story behind the numbers. And let me tell you, Kura Sushi USA Incorporated might be cooking up more than just sushi in their latest report. Alright, let's dive into Kura Sushi USA's quarterly report for the period ending the 30th of November 2025. This report is like a snapshot of the company's health, giving us a peek into how they've been doing over the past few months. First up, let's look at the balance sheet. This tells us what the company owns and what it owes. On the 30th of November 2025, Kura Sushi USA had about $443 million in total assets. That is up from $430 million in August of the same year. Now for liabilities, what they owe, that also went up from roughly $199 million to $214 million. So the company is growing, but it is also taking on more obligations. Now let's talk about how much money they're actually making or losing. For the 3 months ending the 30th of November 2025, sales were $73.5 million. That is a pretty good jump from $64.5 million in the same period last year. That is a 14% increase, which sounds great on the surface. However, when we look at the expenses, things get a bit more interesting. Food and beverage costs went up by 17.5% and occupancy costs jumped by over 22%. This means that while sales are growing, their costs are growing even faster. This is where we see the impact. The operating loss for the quarter was $3.7 million compared to a much smaller loss of $1.5 million the previous year. That is a significant worsening of their operating performance. So while they are selling more, they are also losing more money with each sale. And when you factor in everything else, their net loss for the quarter was about $3.1 million. That is a pretty big jump from a net loss of just under $1 million in the same period last year. They made $73 million in sales and ended up losing $3 million. That is not a great sign for profitability. Digging a little deeper into those costs, the report mentions that tariffs on imported ingredients significantly impacted their food and beverage costs. They also say they increased menu prices to offset this. So they are trying to pass these costs on to us, the consumers, but it looks like it is not quite enough to keep their profits in check. Labor costs also went up by over 12%. While they say this is due to new restaurants opening, the percentage of sales spent on labor remained relatively stable, thanks to menu price increases. Still, it is a big chunk of their expenses. Now for the interesting part, stock-based compensation. This is basically how much their executives and employees are being paid in company stock or stock options. For the 3 months ending the 30th of November 2025, stock-based compensation was over $1 million. This is a significant expense that affects their net income. Looking at their stock options, they had over 593,000 options outstanding at the end of November 2025. That is a lot of potential shares entering the market, which could dilute existing shareholders if exercised. Let's check out the cash flow. This is like the lifeblood of any business. For the 3 months ending the 30th of November 2025, they had positive cash flow from operations of about $500,000. That is a decrease from over $4 million the previous year. Now that might seem small, but it is better than a negative number, which would mean they were burning through cash just to keep the lights on. However, their investing activities show they spent over $13 million on property and equipment. This is likely for building new restaurants, which is part of their growth strategy. They also purchased over $18 million in investments. So they are spending a good amount of money on future growth. Financing activities are interesting too. In 2024, they received over $64 million from a stock offering, but in 2025, that inflow from financing activities has dropped dramatically to just $1,000. This indicates they are not relying on external funding as much, this period perhaps due to their own cash generation or a strategic decision. They have about $25 million in what they call purchase obligations. That is commitment money to buy food for restaurants and to build new ones. This means they have future expenses already planned out. Then there is the legal side. A former employee filed a class action lawsuit for alleged wage and hour violations. This is something to watch, as these types of lawsuits can become quite expensive. Management believes it won't have a material adverse effect, but that is a pretty common statement in these reports. Their income tax situation is also notable. They recorded a tax expense of $36,000 in 2025, but they're carrying a full valuation allowance against their deferred tax assets. This means they don't expect to utilize those past tax losses to offset future income, which is usually not a positive sign for predictable future profitability. Let's talk about investments. They have a substantial amount in US government agency debt securities and treasury notes. Some of these are held to maturity and some are available for sale. This is a fairly conservative approach to managing their cash reserves. So what is the big picture here? Kura Sushi USA is expanding aggressively, opening new restaurants and increasing sales. This is good for growth, however their costs are rising faster than their revenue, and their net loss is widening. They are spending a lot on new locations and investments, and the impact of tariffs and inflation is clearly being felt. The 14% increase in sales is impressive, but it is overshadowed by a significant increase in operating loss. This suggests that while they are attracting more customers, their profitability per customer is decreasing. It's like buying more inventory but selling it at lower margins. Their adjusted EBITDA, which tries to strip out some non-cash expenses and one-time items, is also down. It went from over $3.5 million in 2024 to $2.4 million in 2025. This means even with adjustments, their core operations are generating less profit, and the restaurant level operating profit margin has also decreased. This metric shows how profitable each restaurant is before corporate overhead. A drop here means individual restaurants are less efficient at turning sales into profit. Overall, Kura Sushi USA seems to be in a growth phase, aggressively expanding their footprint. However, this expansion comes at a cost and their profitability is taking a hit. They are navigating rising ingredient and operational costs while also dealing with a lawsuit. The company's strategy of opening many new restaurants is a high stakes game. They need to ensure that these new locations quickly become profitable enough to offset the increasing costs and start generating positive earnings. The increased sales numbers are a positive sign of customer interest and brand recognition, but the widening losses are a red flag that investors will be watching closely. They need to find a better balance between growth and profitability or risk a significant financial strain. Alright, that is our breakdown of Kura Sushi USA's latest filing. What is your take on these numbers and what they signal for the company's future? Are they on the right track with their expansion, or is this growth coming at too high a price? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps, and of course subscribe for more deep dives into the corporate world. Don't forget to check out our Discord community linked in the description for more discussions and insights. Thanks for watching, see you next time.